Well, good day, all. Ira Epstein of Linn Associates with, a Fed testimony day on Wednesday, July 10th, 2019, and we're just getting on to 4:45 in the afternoon. Before the boards changed, a bunch of new record highs being made in stock indices. Fed Chair Powell, I think, basically, without saying it, said it, that the Fed would rather err on the side of keeping the economy going. They're not that concerned about the jobs data that was so strong. I think that the Fed is telling the market it's got its back. It's going to start an interest rate cut. Whether there's more than one, don't know. But he's concerned about trade and lack of inflation. Is he worried about job heat from inflation? Nope. Couldn't even explain why the Phillips curve isn't working. Not his fault. It's just how it is right now. You can see the metal markets took off to the upside, the dollar down because the Fed, which has been raising rates, is now embarking on a potential of lowering them at the end of the month. When we take a look at a weekly area chart of closes, this is it. You're at the highest close you've had, 29.9750. And of course, on this close, I was watching today people calling for 3,500 before year end. I don't know if they're right or wrong, but whenever you make a new high or a new low, well, at that point, you always get these calls. I'm not saying they're exaggerated. What I am saying is this market's in an uptrend, and now you've got low interest rates. Whether it comes in July or September, it certainly sounded to me. I can't tell you how the market's going to do on July 31st when the Fed meeting is, but it certainly sounded as though the Fed wants to err on the side of extreme caution and keep inflation going. They don't want to lose the bit that we have, and it's a bit, and it's slowing down, and they don't want the economy to lose where it's at, and they're looking at world trade and they're concerned. I wrote about all this in my reports today already. As you see where the market's at on the charts, the market just keeps getting small breaks, holds them, and moves higher. When we look at the swing lines, you can see how this has been going. Higher lows, higher highs. The high we had here at 30.06, taken out today with a high of 30.0750, a new all-time high close, a new all-time high in the market. When we take a look at moving averages, we haven't even gotten back to them, and you haven't gotten back to them since the beginning of June, so approximately 5-6 weeks. When we look at resistance, right above the market, the upper Bollinger Band at 30.1550, and each time we've hit it, the market has backed off a bit. It hasn't ended the trend. It's backed off a bit, and that's the sign of a bull market. When you have momentum and you look at it, the momentum in the market, both numbers today got back over 80. Now, this is important. Yesterday, one of the numbers slipped under 80, but if we go the days before, both numbers over 80, both over 80, both over 80. Therefore, you had 3 days in a row over 80. You pulled back, which means you lose the embedded reading, and the only time you can get it back is the day after you lose it. So now the market's embedded again. I have seen occurrences where you re-embed and you come back again, but that'd be a sign the market's weakening. Is this market going to keep going? That's the question. At this point, the trend is up, the bias is up, and momentum is locked in bullish with it as well. In the NASDAQ, when the market lost this embedded reading part right here, price in the 18-day average did make a run at each other, but they didn't hit. And that's okay. The world isn't perfect. Ideally, that's what it does. Momentum loss often is ahead of price loss. So you had that, now you're back up to the upper Bollinger Band. That part of the trade is working. The first challenge of it stopped the rally today, that area. Now when we come to the Dow, the market never did have the embedded reading here. It also never made, when it lost the embedded reading back in this time, it didn't get to the 18-day average either. Yes, you lost some of the price momentum, and the question is now, in an overbought condition, will it get it back? Right now, it doesn't have it back. It's still trading in this sideways action that it had. The bias is up, momentum is overbought. The trend, however, is up with higher lows, higher highs. So 2 out of the 3 isn't bad. Is it enough reason to get overly aggressive? I'll leave that up to you. In the Russell, the market came down, challenged, as you know, yesterday, the 100-day average of closes, held it, today back up. But this market and the Dow are not as strong as the NASDAQ and the S&P. That's the way to look at it. This morning, I was telling people yesterday, and I again said it today in my videos this morning, I was telling traders, be careful here. Those that write these puts starting maybe in this area right here probably got out against that 18-day average. Why go through today's testimony? And I expect that's what occurred. What is the trend in the VIX? It's down. Lower highs, lower lows. It did rally back into that 18-day average of closes. As you can see, this was 1471. 1460 was the high of the 18-day average coming in today. It got to 1469, as you can see. So it absolutely hit it and turned back down. But it got close enough, and that's all that I look for. In the bond market, now the question is, if the Fed's doing what they're doing, what's the game plan? And my guess is they want to stop the inversion between the 2 or the 3 month and the 10-year note. That's what I think is going on. Market has gone from an upper Bollinger Band to a lower Bollinger Band. So the idea of the 30-year bond just continuing to fall, well, that ended right now. So now you're back into caught between these two without a trend, as I call it. In the 10-year notes, you have lower highs, lower lows. Was that move under 2% in the 10-year it? That'll be the question. Some traders are saying it's going to 175, and I saw a group of traders today saying, no, you're not going to get back under that 2% move because the Fed's getting involved in the market. I don't know. Here's what I know. If one were bearish, today was a cover your short day on the first challenge of the lower Bollinger Band in an oversold market. Doesn't mean you can't go lower, but if you believe that the first time you hit the upper bands, you see money coming out, why not the lower band? Admittedly, this market's in a sideways pattern, and from there, a trend is going to develop. When I come over to TLT, you have a pattern of lower highs, lower lows, momentum pointing down. The bias is down because you're under the 18-day average. That's how I define bias. Are you over or under it? And I use bias to filter my swing line theory. So when I'm looking at swing lines with the trend up or down, I'm always looking to see what the bias is. If the market's got, for example, the swing line down and you're over the 18-day average in pricing, well, the two negate each other. In this case, they're not fighting. I'll call resistance now at 132.47. I think that's what the bears have to defend without letting the market getting back over 133.52. Target potential, I don't know where it's going, 131.16, the lower Bollinger Band. In the dollar index, this rally to the upside came to an abrupt end today. How? Well, if you look, you had the pattern of higher lows, higher highs. You broke that today. You were overbought, and with the Fed talk today, it might be a watershed event where the market looks at the dollar and says, well, why should I be buying the dollar? The Fed's going to be trying to keep interest rates down, suppressed, and keep the economy going. So it's a thought process. If the market drops, maybe the 96.33, the combination of the 18 and the 100-day average is where the market goes back to see what it's got. Take out 97.19.5, and I think this is what will happen. Traders will start scratching and go, what the heck's going on? Why is the dollar so strong? So it would be some other event. Because if you're interest rate sensitive, that's something you look at. In the eurocurrency, as the dollar fell, this market got its bid because the market's expecting that when Miss Lagarde comes into play at the European Central Bank, that she's going to have her hands full, but what you got to start thinking about is quantitative easing. I mean, there's only so much monetary policy can do. Fed Chair Powell said that today. And part of it is you've got to get fiscal policy going, not just monetary policy. So the question is there. So the question is, if you do rally more, what about these two resistance points in the market? Because anyway, I look at it, take out the swing line high at 114.64, anything's possible, but in a straight line, not probable. Therefore, a different chart pattern probably is likely. Oversold condition, now we'll see if there's any legs back up. In the British pound, one of the things I've been telling you is the market's been riding this lower Bollinger Band as it pushed out of this sideways action. If you come here, you can almost see that sideways action develop in the band. Then it got down to it like a magnet, it just rode it. Is it ready to get over these numbers, 125.81, and neutralize itself a little bit? Could be. We got day two of what I call, because I'm older, the Humphrey Hawkins testimony. It'll be the monetary policy explanation to the Senate tomorrow, but that's what it used to be called. And as you can see, the market is oversold. Japanese yen, a reversal today of some magnitude here. The market doesn't have a trend. It has a higher high, lower low. It missed out on hitting that lower Bollinger Band in an oversold condition. But now I'm wondering, until you take that low out, is the market going to enter a period of a bit of short covering? In Bitcoin, this was a fairly decent move to the downside, an outside day down. It doesn't break the uptrend. It probably sets up another resistance point prior to the upper Bollinger Band. You'd have to get through this number on the current chart pattern, which is 9805. I'm sorry, my eyes still. 9805 to negate that bias that you have to the upside in the market. In Brent versus WTI crude, a bit of a bounce in it now. Keep in the back of your mind what's going on here too. You're going to have now that tropical storm that's developed in the Gulf. It's probably going to turn into a named storm. If it's named, the name's going to be Barry. That's just how it works with the names that they choose at the beginning of the season. We'll see what it does. New Orleans, 9 inches of rain today. The state has declared a state of emergency, as well as New Orleans itself, and there's a lot more rain on the way, so we'll see what that does. In the energy markets, everything in the Gulf, and I don't want to use the word everything, I shouldn't have said it that way, but 32% of the rigs have now evacuated. So a lot of the rigs have evacuated. The market rallied in the Brent also to the 100 and the 18-day average. Why did the Brent get stronger? Well, the president's threatening even more sanctions on Iran today after he took them to an emergency meeting of the International Committee that looks at nuclear energy, and he's accusing them of having broken their word a while back and said more sanctions coming. That put a bit in it. You're scaring those market traders. And of course, in the U.S., we've seen the EIA and API both see sizable declines on the storage supply, and now you've got the storm threat. So the market went up through the 100-day average. It tells me that maybe if it gets a little more momentum, maybe it can get the upper Bollinger Band. It is an overbought market. It's got a storm center coming at it. You never know what that means. Gasoline, natural gas, everything gets shut in. So it's a difficult time. You always pay attention to weather because it can impact for a short period of time the fundamentals. It's also hot. In Chicago, it's 90 degrees outside. We write about all this. So whatever market you're looking to cover, our research throughout the day is coming to our clientele and showing them what we think. And I don't mean a report. We have a lot of reports that go out all day long. And then I write my own research. If you haven't tried what we do in research, you might want to go to our website and take a look at the free offerings we have and give yourself a try with that, especially that morning video that I put out, because in that video, I'm recording at about 6 in the morning, that's AM Central Daylight Time, and I'm setting my subscribers up for what I think are the day's events. Might be something you like. You might have your own trade ideas, and maybe that's something you bounce it off of. To find out more, either call us or you can go to our website. You'll see our carousel of free offers. Click on that, and you can always click up here to get to there as well. I'm Ira Epstein. Remember, tomorrow another day of testimony, and of course a big grain report coming out in the morning. I'm Ira Epstein. You have a good day. See you tomorrow.